Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 23rd day of April, 2014, and this is the daily report for gold and silver. For the first time in at least a week, we see precious metals across the board trading higher, although very, very nominally higher. As you can see, current print on the screen, 1283 and change, call it 1284. Puts it up roughly 40 cents to $1 on the day, the low 80.10 and the high 90.10. We can also see the same happening to silver. Silver's higher, although nominally higher, up about 7 cents on the day. 1944 with a low of 33, a high of 65, and to me the key is that it is still trading under 58. More on silver towards the end of the show. You know, traders, this isn't the first time that I'm mentioning this, but I really believe that lately what we have seen in terms of this market is it's been incredibly fundamentally driven in that it is waiting on any kind of discourse that's coming in over the Ukraine. The market rallied when there was tension. It withdrew and contracted when there was a perception that there was less tension. Now, the perception is that there is going to be more tension. There's some skirmishes going on, veiled threats happening here and there, and we are seeing that being supportive of the precious metals market, specifically gold. The key right now, as far as I'm concerned, on a technical basis, is whether or not this particular bottom right in here is going to hold. Because we have 1275 as our recent low. When this market came down after hitting that high of almost 1400, it touches to this low, 1275, comes up roughly 50%, 1332.50 was the high, and it was our belief that the market would probably come down and test 62. However, that hasn't been the case, and we have seen this low at 1275 hold now on the second occasion, although very, very subtly, because when we look, we can see that it is tested it only on one occasion right here, but at the same time, it is just drifting nominally higher on today's trade. So that being the case, we want to begin to look for any kind of a signs of a weakening of this most recent downtrend. When we look at our daily chart, that's what we're doing right now. We're looking in straight Japanese format. Take a look at this last time that the market sold off. As it came in, you had the absence of upper wicks or tails, whichever you want to call them, really up until the point in which we had that doji-like candle, very, very small-bodied red candle, and then from there we had a turnaround and we went to straight green. Now, when we look at it now, we have gotten a smaller body size. It is a first indication, but we still have the upper wicks absent, and we have lower wicks, which really isn't important on a downtrend, but the body size is beginning to get a little bit smaller. For a little bit more insight, we'll probably want to convert this into a standard candlestick chart. And when we do that, we do get an interesting candle type. Let's go ahead and try to blow this up just a little bit. But in essence, I think you can see it even at this size. And that is the fact that what we're looking at, let's go ahead and blow that up, is a doji. In other words, you do have this green candle because it's trading nominally higher. Green or red, what really sticks out to me is the fact that we are getting this doji, and the doji, of course, is a point in which the open and close are pretty much identical. And so when we consider what we're looking at, if we have the market trading down, we have this red candle here, we have our doji in the center now. If it is followed with a green candle, which would look something like this, of course I'm making it a little bit wider than it would be, then we would actually have the Three River Morning Star variation that we typically look for as a market comes down. So have we seen an indication that we could have a potential bottom? In fact, we have. Do we have any technical evidence that we in fact have that? No, we don't. What we have is really an indication that it is possible. Now, a couple of things are lining up, and what is really lining up that sticks out to me, first of all, is the fact that this low around 1275, that has held. That's the first thing. The second thing is this doji. And the doji to me really is significant, although we can see many occasions in a light market which is what we've had lately, where it's simply a resting area before continuing on the direction, the prominent direction that it's been in. And in this case, of course, that has been lower. So we're certainly not out of the woods yet. And we still could go and test this area at around 1262. But the fact that we have held these lows to me is becoming significant if, in fact, we see follow-through. And the fact that this market is so rumor and news-driven, and when I say news-driven, of course, it always trades on fundamentals, but when you have geopolitical uncertainty, which can change day to day, which can get worse, which can get better very, very quickly, as opposed to economic data, which tends to kind of linger, build, and then build upon itself as you get a report out, you get another report out. Those reports aren't going to change. However, with geopolitical uncertainty, we could feel one moment that we could hear news that is basically saying the sky is falling in, and then the next moment that the sky is being held up by some miraculous accord. So you get this very, very quick and decisive change in market sentiment that you don't get when the market is running from economic news as opposed to geopolitical news. And of course, to me, the key is that this market is being driven on geopolitical news, and it will switch much quicker. I tend to not so much look at the technicals less, but realize that anything can turn on a dime when we're looking at a scenario like this. According to this Andrews Pitchfork, we're right in the middle. And when we're in the middle like this, it appears as though it should head a little bit lower before moving back up. But once again, anything can happen in this kind of a market. Now, as we look at this chart, this is a 2-day chart, of course, and it's quite easy to see our one really strong rally that we had beginning of the year. And now, as we can see this, we've gotten our A, our B. We can see some kind of a C here. That C could actually unfold as a flat. If it is a flat, it's going to have an equal low. That's what we're getting. And then from there, we should go into some sort of an impulse 3. And an impulse 3 would be a welcome site, because that, of course, I believe would really move this market significantly higher. Now, when we step back and we look at our weekly chart, of course, we still have a down week. We are towards the middle of the week, so we are forming our candle right now, and that candle still remains red. My sense is right now that if we see a follow through and we see a continued or a regrowth, I should say, of the tensions over in the Ukraine, we should see this market pop up, and from there we will plan our strategy. Of course, silver's really been lackluster lately. The markets have genuinely been quiet. I haven't seen them this quiet in quite some time. We know that we have support down here at 1920. My sense is that we have to really get above 1958. 1958 being a pretty critical area on a technical basis. And then we are still have to define the fact that this market has now broken out of this range, but at the lower end. So the question is, will it begin to trade in a tight range, define maybe 62 on the top, 1920 on the bottom? We haven't had any kind of a technical real move in this market that's significant, any kind of move that shows us some sort of a spurt like we are here. We are on the sidelines, we are awaiting news, and we are awaiting a strategy that will allow us to take advantage of technical evidence that tells us that we have weathered this most recent correction and that we are going to be looking at higher pricing ahead. We haven't had that yet. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.